Today, we're going to talk about a few subjects. One of those is going to be the NHR. The second subject is going to be fiscal representation. And the last subject is going to be the tax obligations in Portugal. I'm sure you're all very excited by this because everybody loves tax and accounting, I'm sure. Let's begin. The NHR program, or the full name, the non-habitual residency. What is this? A lot of people have heard about it. Some people have it, some people don't. But let me go on and explain what the NHR really is. This is a tax regime that was created with the approval of the Investment Tax Code, changing the rules for Portugal personal income tax. It grants a set of exemptions and a flat rate taxation period of 10 years. Now, the NHR, it attracts many people to come to Portugal, live here, enjoy the lifestyle, but also enjoy the tax benefit of having the NHR. The NHR was actually introduced in 2009, and since then, there's been a steady influx of expats moving to Portugal and taking advantage, again, of the reduced tax rates. There's also lots of exemptions with the NHR. And just to give you an update, in 2020, there was a difference between phase 1 and phase 2 of the NHR, which meant that the NHR changed its rules on pension income, which now means pension income is taxed at 10% rather than a flat rate of 0%, as it used to be from 2020 before. There's also a list of high value activities, which I'll go on to explain later, which also help people in Portugal if you have certain types of income categories. So if we're talking about the NHR and how you can qualify for the NHR, this is obviously one of the most important things that you need to be aware of. The first thing that you need just to get the NHR is what's called a NIF number. Gonçalo, maybe you can say in Portuguese what the NIF is, or how you describe the NIF in Portuguese.
Okay, so basically the NIF number is our tax ID number. We call it Número de Identificação Fiscal, which is a tax identification number in Portuguese. And it's basically used for everything here in Portugal, starting a bank account, opening up a company, and even going grocery shopping and having the costs put on your expenses for the whole year on your tax return.
Exactly. And the NIF, which is why we shorten it to NIF rather than try and say what Gonçalo says, because it's very difficult to say in Portuguese. So that's why we need a NIF number. It's actually very straightforward to get, and it can happen within normally a couple of weeks. You can either do it through a fiscal representative, which I'll go on to explain, or you can go and do it in person at a local tax authority office, and they can basically register the NIF for you as well. The second thing that you will need to qualify for the NHR is to become a tax resident. And that may sound easy, but there's a number of ways, again, to become a tax resident, because it sometimes does get a bit complicated. So one of the ways to become a tax resident is by staying more than 183 days in Portugal within a 12-month period. The 12-month period actually relates to the tax year, which is between January to December. So that's one of the ways you can be considered a tax resident. Another way, and maybe a more straightforward way, is if you occupy a residency in Portugal. This can be by leasing a property in Portugal. However, when you do lease the property needs to be registered with the tax authority. This is something that a landlord has a lawful right to do. However, we have seen landlords, quite a few, that don't want to register the tax authority, which then becomes an issue when we want to apply for the NHR. So we always stress to clients, look, please make sure it's registered with the tax authority. Another way is to hold a certificate of residency, This is available for EU citizens. I know with a lot of UK individuals after Brexit, it's now more difficult. Well, they can't get the certificate of residency. They have to now go through a visa program, more than likely a D7 visa. So the certificate of residency is something that can be used for EU citizens. However, you need to make sure once you have that, it's only available for 60 days to be used within the NHR. Another thing that you should actually also be aware of is that you cannot be considered a tax resident in the previous 5 years in Portugal. If you are considered a tax resident, you will not be eligible to apply for the NHR, and it also means you'd have to wait another 5 years before you could reapply again. So sometimes we see clients that have, say, bought a property in Portugal. They put this as they have their NIF number and used it as a Portuguese address, but they never actually lived in Portugal. If you do that, you are actually considered a tax resident in Portugal, even if you didn't live in Portugal. And sometimes it's very difficult to then speak to the tax authority and let them know that you were not a tax resident. It involves a lot of paperwork, and the tax authority sometimes do not want to accept it for whatever reason. So very important, do not become a tax resident in Portugal by mistake, which we have seen happen on plenty of occasions. Something else to think about is once you have a NIF and you have a Portugal address associated to that NIF, in whatever tax year that happens, so for example, it's 2022, you would only have up until the 31st of March 2023 to apply for the NHR. There's a deadline and a cutoff point. If you don't use or apply for the NHR at that particular point in time, you can't apply for the NHR again, at least for another 5 years. So, sounds easy to get the NHR, not as easy as what you would think. With the NHR, as I said, it's a special personal income tax regime over a period of 10 years. There's some benefits to the NHR. One of those benefits is what's called a high value activity, where you are taxed at a flat rate of 20% on certain types of incomes. One of those is going to be employment income. Another one will be self-employment income. But that's only if you have what's a high value activity. I will just turn to Gonzalo maybe to give a very brief overview of what a high value activity is.
Okay, so basically, hi there, I'm Gonzalo. Basically, a high value activity in Portugal, at least for the tax authorities, is deemed some type of activity that will bring, like the name says, value to the country. This is why doctors and directors of companies and other types of activities that are deemed very important to have in Portugal are taxed at a different rate, because it will kind of make people want to come here, because they have a lot of good doctors, good directors and companies, and even computer engineers, I think, are included in the table. There are a lot of activities there that might apply to you or someone you know. And those types of activities, since they kind of boost the amount of people that want to come to Portugal, the tax authorities thought it was a good idea to lower the rate to make people basically come here and maybe live here. But the main benefits that the NHR come with are mainly the 20% flat rate on every income that you might have. So it doesn't matter if you have 100,000 euros or 2,000 euros, it will always be taxed at a 20% rate, unless you actually don't want to use it. That's why it's a benefit. You might choose to not use the 20%, because there is a progressive rate also in Portugal that starts at 14.5%, and it's lower than 20%. Nonetheless, what I meant by this is it's a benefit. You can choose to not use it, but most of the time we recommend you use it because it's 20% on almost everything, as long as it's a high value activity and it falls on some other categories that we can talk about further afterwards. It mainly falls on the employment income from a high value activity, but it will also give you some benefits on dividends and other types of income that we'll talk further on.
Exactly. One of the things to be aware of with the NHR is capital gains, because there's a misconception that capital gains under the NHR are tax exempt. That's not actually true. With capital gains, it really depends on what they are. If it's what's known as immovable property, then the property is always taxed in the country of location. So for example, the UK or the USA, you'll always pay the tax on property in those countries because that's where the property is located. That would be exempt under the NHR. However, if you have shares, for example, and you sell those shares, that is actually taxed in the country where you are considered a tax resident. So that would be Portugal. So if you had shares from a US company or a UK company again, that would always be taxed in Portugal. And there's a slight misconception, I would say, online, that once you have the NHR, it's just tax-free for capital gains. That's not the case. You then have to look at what's known as the double tax treaty, which is something we will come on to later. But in summary, if you look at the NHR, if you look at employment income, the way to break it down is foreign sourced employment income can be tax exempt as long as it's taxed in the country of source. That's the important factor. If it's not taxed in the country of source, it can be taxed at the flat rate of 20% if you have a high value activity. Self-employed income, we always say it should be taxed in the country where you are a tax resident. So for example, you're a freelancer and you have freelance income, you've moved from, I don't know, the USA, you've now moved to Portugal, you should now be opening up a registration in Portugal as a freelancer and then invoicing through the Portuguese tax authority system, which is the Portal
das Finanças.
Perfect pronunciation. So that is what you should always do as a freelancer. Other income, one actually good factor about the NHR is it does have a very good tax advantage for dividend income. So with dividend income, the rule is for Portugal, as long as the dividend income can be taxed in the country of source, it is exempt from taxes in Portugal. In the UK, for example, if you are a non-UK tax resident, the dividend tax is 0% in the UK, and it would be exempt from taxes in Portugal. So that would be tax-free dividends. Again, depending on the country where the dividends come from, you could end up with 0% tax or potentially 5% tax in a country or 10% tax in a country, but it would always be exempt under the NHR. I can see that we've got a question, so let's just have a look at that question. Thank you, Esther, for that. Will the high value activity count if the work is not from Portugal? I'm a resident in Portugal, but I'm from the UK and work in a university 3 months a year. I would have an F and NHR status.
Okay.
That's all.
Yeah. So basically, the NHR acts. First of all, you would need to be a resident to get the NHR, like Jeremiah said before. So if you're living in Portugal, or if, for example, you will only be required to do a tax return and actually pay taxes or report the taxes if you're actually living here or you have income from here. So if the income is coming from the UK, and if you're not a resident, you won't need to pay anything. Portugal doesn't reflect that. We don't charge the rest of the world. But basically, if you're living here and if you get income from outside sources, the rule with the NHR, the normal rule is if it actually is already taxed in the country of origin, it needs to be taxed there. It can be exempt here, but it depends on the double taxation agreement. Nonetheless, if it were to be taxed in Portugal, it would be at the progressive rate, or if you have the NHR, you can also use the 20% rule because it applies to all income from a high value activity. As long as it's deemed as a high value activity, it will be applicable for the 20%.
Exactly. Now, with that UK income, as Gonzalo said, it should be applicable to the 20%, as long as it's, but if it's taxed in the UK, it's purely exempt from taxes in Portugal.
Yeah, some double taxation agreements might say something, depends on the country, but from experience, we know what happens in the UK.
Exactly. So we're now going to move on to fiscal representation. Again, another misconception online is what this really is. The best way I can describe it is that every person living outside of the EU needs to register a fiscal representative in order to comply with Portuguese law. And I suppose the next question would be, what does the fiscal representative do? And what is the law for a fiscal representative? The fiscal representative acts as a liaison between the person and the tax office, ensuring timely payment of taxes in accordance with statutes enforced by law. If we look at a fiscal rep, the main question is, why would you need one if you don't live in Portugal? One of the reasons why you would need a fiscal representative is you could own property in Portugal. If you own property in Portugal, you're going to need a NIF number. As we explained earlier, the NIF is used for everything in Portugal. Look at the NIF and think this is like Big Brother, and Portugal wants to know everything about you. So if you buy a property in Portugal, you'd have a NIF number. There would also be taxes payable on that property in Portugal. And because you don't live in Portugal, you need a fiscal representative to act on your behalf to basically say to the tax authority, this is the person, I'm communicating and acting as the liaison between the tax authority and the person that owns the property. That's, I would say, is the best way I can describe why you need a fiscal representative. You could have a business in Portugal. Again, you would need a NIF number. You would need, that business would need a fiscal representative. Or if you live outside of Portugal and have any other types of income in Portugal that requires you to do a tax return, again, you would need a fiscal representative to be able to communicate that on your behalf. If you don't have a fiscal representative, it can lead to fines from the tax authority and loss of potential earnings as well. Now, if we look at the fiscal representative, we need to find out or let you know, what does the fiscal representative do and what are they responsible for? And I'm going to let Gonzalo explain what a fiscal representative is responsible for.
Yeah, so basically a fiscal representative will be responsible to towards the tax authorities because of you or whoever is being the fiscal representative of. What I mean by this, and like Jeremiah explained, it's basically the one who connects with the client or the person who has the NIF number in Portugal and doesn't live there, to the tax authorities. And he needs to be a Portuguese resident in order for them to be in contact with him. Why we need a fiscal representative, it was actually changed, I think, last year or the year before, and till the end of June, everyone who has a NIF number and is not a resident now needs to appoint a fiscal representative. This is because the tax authorities kind of only apply to the laws in Portugal. They don't. They can't make someone from Italy go there directly to their tax office and respond to their questions. And for example, if you do a tax return and if you tick some sort of box or put some sort of amount that comes from renting income, or if you don't, and the tax authorities know of that, for example, you might be renting a house and don't declare it on your tax return, they'll need to ask someone who's resident, why did that happen? And that person will respond for the non-resident person because that's his fiscal representative. Sometimes you can also get fined or some stuff like that. And what happens is, if you have a fiscal representative, every correspondence with the tax authorities will be sent to their post box. In Portugal, we are kind of old-fashioned still. We still use the mailbox. Yeah. And everything would be sent to a physical location, and it needs to be in Portugal. And that fiscal representative will have to answer the tax authorities because he lives in Portugal and is receiving the correspondence. And that's basically the need for the representative is mostly because you need someone living in Portugal that can get the correspondence and respond to the tax authorities in due time, because this might need to be responded with another letter by post, or even going directly to the tax authorities, or maybe via email from the person who's responsible for the client or the contributor.
And it's very important to know that if you become a fiscal rep for somebody, which we do know we offer the service, but other people offer the service, is that they are actually jointly liable with the taxpayer.
Yeah.
So if the taxpayer has a tax bill for, say, €1,000, the taxpayer decides, I'm not going to pay that tax bill, I'm not going to communicate to the tax authority or send anything to the tax authority, then the fiscal rep is actually liable for the amount of that debt, and also any fines or penalties that would be incurred. So you may see people charging lots of money for fiscal representative services. The reason why they do that, obviously everything must have a limit, is because if a taxpayer doesn't pay, that is their sort of insurance to say, look, we have this income, we can pay the amount of tax owed. One thing you should know is, once you have a fiscal rep, how would you change your fiscal rep or remove a fiscal rep? Because, for example, when people come here on visas, say from outside the EU, they would have a NIF number and appoint a fiscal rep until they can become an official tax resident in Portugal. Once you're an official tax resident in Portugal, the fiscal rep is no longer required.
Mm-hmm. Yeah, the one thing I forgot to mention, if you're living in the EU and you are currently, you want to get a NIF number, a Portuguese NIF number, technically countries in the EU and the European space, including Norway, Switzerland, Liechtenstein, and one other country that I can't remember right now, doesn't need to have a fiscal representative because it's still in the EU, unless he wants to start an activity. If you want to operate in Portugal with some sort of activity, you'll need a VAT representative, which is kind of the same thing. It can be the same person, but the fiscal representative will be just for the tax return and to respond to the tax authorities. And same as the VAT representative, but you would require one if you have an activity, even if you live in the EU.
Yeah. So it's very important that when you choose a fiscal rep, both parties have trust in each other, and that you know the fiscal rep is going to obey the tax laws of Portugal, and so should the taxpayer.
Mhm.
And we're coming on to now look at the tax obligations of Portugal and what do you need to do in Portugal once you become a tax resident. Like we said, once you have a NIF and that NIF has a Portuguese associated address, from that particular point in time, you are considered a tax resident in Portugal. The tax year in Portugal runs from January to December, so it's a calendar year, like the USA, which is also has a calendar year, but different from the UK, which runs from the 6th of April to the 5th of April. So that's the tax dates. Then we need to look at, well, okay, you've now come to Portugal, you're a tax resident, you need to file a tax return. When can this be filed? The tax year ends on the 31st of December. The filing dates for Portugal, they have this from the 1st of April to the 30th of June the following year. So for example, you need to file a tax return for this year, last year, should I say, 31st of December 2021, you would need to file the tax return in Portugal between the 1st of April and the 30th of June 2022. One thing to know is Portugal, once you submit the tax return, this then needs to be accepted by the tax authority. It's not just accepted straight away. For some reason, Portugal like to take their time. As you're probably all aware, Portugal is a great country. Sometimes it's a bit slow with certain aspects of just life. So the time that could take could be literally anywhere from 2 weeks to 4 weeks. So we always tell our clients, look, get us the information as soon as possible so that it gives us time to be able to file that tax return for you. Not to say that there's going to be anything incorrect, but that's just how it works for Portugal. When we're looking at the tax return, one of the most important things to note is that Portugal wants you to declare your worldwide income. So whether you had income from Brazil, Australia, New Zealand, it doesn't matter. Portugal says, you're a tax resident here, we want to know the worldwide income that you have. This could be capital gains, it could be pension income, royalties, employment, self-employment, doesn't matter. Portugal say, we need this information from you. When it comes to filing a tax return, we use the Portal de Finanças, and that's the portal that we use for the tax return to make sure we file everything. One of the things you'll always need is the NIF number. We need the login details to the tax authority. I know in some countries you can use tax software or other types of things. In Portugal, it's not that far advanced as of yet for tax software, for personal tax. Hopefully one day it will get there. If anybody knows how to build software, let me know, and we can maybe go to the government and see if they'll do something. One of the other things we need is statements of all your Portuguese or foreign income. We'll also need statements of any tax paid in foreign countries. So from clients, we normally ask for tax returns of the countries where they've lived previously. That could be the USA, UK, for example. Portugal also wants your IBAN and SWIFT codes for your bank accounts. I'm going to let Gonzalo maybe just say why they want to know your bank account details, because some tax return countries do not ask for that information, but Portugal does for a reason.
I mean, as far as I know, I'm going to be completely honest, I don't know why they asked it, because it's completely irrelevant for them, because they can't do anything with the bank account. They just want to know everything, and they don't actually need to. But they ask you for all of your bank accounts, and technically they can, if they know that you have another bank account, they could ask you to respond to that and say, look, we know you have a bank account in Israel and you didn't report it. Are you hiding something? Do you have any income from that country? As far as I know of, no one's gonna ask for your bank. If you have a bank account in the US and you report that that bank account had $0 in at the end of the previous year, the tax authorities are not going to check if it actually has that money. I think that's mainly for their knowledge to know how many countries you're how many countries you have your money placed in, because as long as because they will ask for the IBAN and they'll also ask for the amount of money at the end of the year, and they can't check that amount. They can't go to all countries and ask, look, how much money this person had at the end of the year. It's mainly for their knowledge to know where you have money and bank accounts.
Exactly. And the last thing that we always ask our clients is for your household composition. If you want to maybe just explain that, Gonzalo, what that means in Portuguese terms.
Household composition, it's basically, you could be married, you could be single, you could have 5 children, you could have 4 children. In Portugal, there are some benefits for how many children you have. Even if you have your mom or dad living with you, if it's dependent on you, if he doesn't get any money, even pension income, or his pension income is very low, it will be dependent. And there are benefits for how many people that live with you and how many people share your household. Because if you're married, you can do what we call the I don't know if there's a direct translation to English, but it's a conjoint tax return.
Yes.
And it's basically when you report both your incomes, and instead of one person maybe being charged 48% for all of their income, and the other person being charged 14.5. If you combine the income, you might only be charged 28 for both, and that might be more tax beneficial. As long as with also that information of the dependents being children or moms and dads on their care, living on the same household, those are some benefits that might lower the amount of tax that you pay.
That's true. And what we do with the tax returns, we never submit the tax returns without approval from our clients, but we can send our clients the sample tax return. So, for example, if we, as Gonzalo said, if we're looking at a joint tax return, we could do a joint tax return or look at it for 2 individuals and see which is the best outcome. So that's one of the advantages of using the Portuguese tax authority, I would say. And now we're just going to look at sort of the tax obligations, and also, as we mentioned earlier, when are you considered a tax resident in Portugal? Because this is obviously important for when you then need to actually submit a tax return. So as we said before, if you stayed in Portugal for more than 183 days in a 12-month period, you're going to be considered a tax resident. If you have a household, either you bought a property in Portugal or you've leased a property in Portugal, and as we said before, it must be a lease that is registered with the tax authority, and that is done by the landlord, or the other way is by having a certificate of residency. And as we said, once you have the NIF, it's associated to a Portuguese address. Portugal say, we want to tax you, we want to know everything about you. There's no escape, which is why RHJ is here. So one of the, I would say, best ways to look at Portugal is that Portugal actually has a number of double tax treaties with a lot of countries, which can protect you from paying taxes again on the same income. That's the way to look at what is double taxation and what is a double tax treaty. The main thing is, if you normally pay tax in one country, the double tax treaty should avoid you paying tax in another country. That's not always the case. it really depends, I would say, on that double tax treaty. We know for the UK or for the US, there's certain advantages, as we mentioned before, for dividends, things like employment income, self-employed income, there's certain advantages, but then also on the flip side, with capital gains, we mentioned immovable property will always be taxed in the country where it's located. Anything else as a capital gain, like the sale of shares, for example, will be taxed in the country where you are considered a tax resident. What I would also say is, as experts, we have plenty of, I would say, experience now looking at a lot of different tax treaties, USA, UK, France, Brazil, pretty much anywhere on the continent, or the planet, should I say. And that's why I would always say it's very important to know what is the income you have, what tax treaty can it be applicable to, because the last thing you want, and we've seen with plenty of clients in the past, that they've paid tax in one country when they didn't need to pay tax in that country, and then paid it again in Portugal. And what we'd say is we found that's very difficult to then try and get a refund back. It's not something that you want, because then that involves two countries speaking together about tax, which could take anything from months to years. And we have reached the end of our presentation, and I can see that there's some questions. So what we're going to do is start going through these questions, and please, everybody, if you have more questions, just please put them in the chat. So let's look at some of these questions from Darren. So if you work in Portugal in high value activity for a company that's based in another EU country, and you have the NHR status, what taxes and social security would have to be paid on that salary? For example, I guess the employer would have to register pay as a Portuguese employer social security taxes, because the company need to do that before you start working in Portugal. And the second question, we'll answer the first question first.
Yeah.
So I'll let Gonzalo answer that part.
So basically, technically, there are two situations that can occur here. It's mainly not an issue, but it's mainly resolved by the company, because what can happen is technically the company can register its activity in Portugal. You can have a branch company in Portugal employing the people that you had from another country. But what can also happen, and it technically wasn't mentioned here, but it kind of also was, is there are double taxation agreements regarding social security, which are not the same as the regular double taxation agreements. But here in the EU, we have a taxation agreement for all the EU that's the same. What happens is, if you already pay social security in another EU country, you technically don't need to pay it anywhere else. That's one thing. And what can happen, I don't know, this particular situation might depend on the company, but what I believe would happen in this case is that social security might be payable still in Italy, even though the person is working here. And on the taxes, it will technically say that it's employed by a Italian company or whatever it is in the country in the EU, and the taxes would be paid there, but then reported here, and stating that they already pay taxes in that country because that's where the company employs them. That's technically not the truth, because you technically should pay your taxes on the country that you're actually working from, and this might cause some issues. That's why most of the time what happens is they simply pay everything in the other EU country and report it here. But technically, what should happen is the original company should register itself in the other country, and it should pay their taxes in the country that the activity is being exerted. But that will mostly fall on the company and the company's decision. The employee won't have any fault on that because they can't control it. But what technically should happen is that the taxes are payable on the country that the activity is being done. If with the NHR, what should happen is Social Security doesn't affect the NHR, and the Social Security is payable on the country that you're working with, like I said. But what can happen is you can pay it in the other EU country and not pay it here. That's perfectly feasible, and I saw it happen sometimes. But with the NHR, what like Jeremiah also stated before, if you are taxed in another country, you shouldn't be taxed here. It depends on the agreement sometimes, but what should happen is that you won't be double taxed. And if you are, if it's a high value activity, the 20% rule will still apply on that. It doesn't matter the country, it just needs to be a high value activity.
That's correct. And also one thing to know with the Social Security is normally in the EU, and we know for the UK for certain, is that you can have an employee posted abroad as a temporary worker for up to 2 years.
Mm-hmm.
After that point, you're supposed to be paying the Social Security where you are considered tax resident. So that's something to consider because it could get quite expensive having to set up a branch or some sort of representation in Portugal just to pay, for example, one employee
Mm-hmm.
Social Security. If you have a team, that would make more sense. But if it's just one employee, we normally say it's not really worth it, and it's probably better to get paid in either as a freelancer or have a company, for example.
Yeah,
is the better way to look at it. We'll look at the second part of the question, which says it's actually a company based in Ireland. If my company paid me as an employee for a few months and then later switched so that the company paid me via dividends for software engineering work performed in Portugal, could having first been paid as an employee make it more likely that the Portuguese authorities will say that my work in Portugal constitutes permanent establishment in Portugal? That depends actually on when you're considered a tax resident in Portugal and when you've actually been paid the salary. If you're paid a salary and you're not considered a tax resident in Portugal, Portugal don't care. They don't want to know anything about it. It's only if you're, say, a tax resident from the 1st of April and you pay yourself a salary for April, May, June, for example, and then start paying yourself in dividends, everything would need to be declared from the 1st of April. So it really depends on when you are considered a tax resident. Is the best way that I can answer that.
Like Jeremiah say, Portugal can only tax you if you are either a resident or the income comes from here.
Exactly. We're going to look at a question from Fiona. Is NHR status approval tied to a particular job, or can it be transferred between jobs? For example, if I get NHR approval while employed in one role, but I leave that company and take another job somewhere else with potentially a different title, do I need to reapply for NHR approval, or does it transfer over? Is there anything I need to be aware of? Good question. That's a very good question. There's two things with the NHR. There's the NHR, and then there's the high value activity.
Mm-hmm.
The NHR you get by having a NIF number, by being considered a tax resident in Portugal, and by not being a tax resident in Portugal for the previous 5 years. That is the NHR. You've qualified, you've got that for 10 years, and you will get certain types of tax advantages. When it comes to the high value activity, that depends on what you do. And then what we look at here is we look at the activity codes in the tax authority and high value activity list, and that can then be applied to say, look, any type of income you have in a particular job role would then mean that we can use that activity code. If you change job roles and have a different activity, we've got to then check to see, can you still benefit from a high value activity for that job role?
Mm-hmm.
So that's the best way I can explain that. It really depends on what you do. You could move 5 different jobs in a year, and if they all qualify for the high value activity,
yeah,
it's fine.
Yeah, basically there's a box on the tax return which asks for what type of income was the income that you're reporting. So if you want to report 10,000 euros of direct job you have as a director that has the NHR, and if you have the NHR, there's and since that's a high value activity, that will be the 20% will be applied to that. But if you, for example, if you are if you have a cleaning service and if you go cleaning some houses, that's not considered a high value activity, and that's taxed at a different rate. But you'll state what type of activity the income came from.
That's true. We're going to look at another question from Esther. I was told to submit my UK tax return for 2021 and declare all my income from April to December 2021. Is that correct, or was it a typo? I thought I need to declare it all from January to December, as I was only a resident in Portugal from March 2020 onwards. So not sure what to submit for the Portuguese tax return. So if you are considered a tax resident from March 2020 onwards, Portugal wants to know what is that income from that period.
Mm-hmm.
In terms of submitting your UK tax return for April to December 2021, that to me should not be happening, in my opinion, because you're considered a tax resident in Portugal from 2020. Oh, I just seen you said typo. You meant April to December 2020, I believe. Yeah, so anything from March 2020, you want to submit in Portugal. Anything before that should be submitted in the UK. One thing to note, though, you do want to, on a tax return in the UK, let the UK tax authorities know that you have left the UK. That's one important factor, because you don't want them to continue to think that you're still a tax resident in the UK. We have one here from Alison. Can unmarried couples do a joint tax return? Gonzalo.
It's like she said afterwards. Sorry, I don't want to assume. It was said afterwards, there is a regime called unit facto, which is basically married without the ring and the license. And Portugal deemed it exactly the same, and you can do it joint. You just need to ask the tax authorities or communicate to the tax authorities that you are unit de facto. That's what we call it.
Perfect. And then the follow-up, you have also asked, if an expat decides to leave Portugal for good, no involvement with life, income, property, etc. in PT, what is the ongoing obligation regarding NIF and fiscal representation until the end of life? Very good question, actually.
Yeah. So, yeah, if you have a Portuguese NIF and if you're not living in Portugal, but if you live in the middle of the year, imagine you live in March, you'll still be required to do your tax return because you were a resident that year. But the following years, and if you're not living in Portugal, you'll need to have a fiscal representative in order to do the tax return. And whenever you stop needing the fiscal representative, or after some time of not living here, you won't need to have the fiscal representative. You're only liable for the tax return and for the tax obligations if you have income or if you were living here on the year. I know in the US, for example, they ask for you to do it always for the rest of your life. In Portugal, you only need to declare if you're either a resident or if the tax authorities deem that you were a resident in some day throughout the year, for example, or if you have income coming from here. Yeah.
And we have a question from Yo. I know someone that missed the 1 year NHR status window and filed after the 1 year window, but was able to work with the authorities to get the NHR status approved. Mm-hmm. Is that something you can help with? You said we can reapply in 5 years' time. Is that true, even if you continue to live in PT? Good question on that one. If they've managed to get the NHR status after the 1 year window, that could possibly be because they managed to prove to the tax authority they maybe were not a resident at a particular point in time. So what we have done for clients with one of our, or quite a few clients, is they'd come to live, they'd bought property in Portugal in 2009 or 2010. And what happened is that they used a Portuguese address. And then in 2020, they actually moved to Portugal to live and wanted to apply for the NHR. We saw they had the NIF address associated with Portugal. So we had to basically gather information to prove that they didn't live in Portugal. We submitted it to the tax authority, they accepted it, and then we managed to get the NHR. So that is something that's possible. And what I would say in terms of reapplying in 5 years, that's only if you live outside Portugal. So you can't be a tax resident in Portugal for 5 years and then reapply. You have to not be considered a tax resident.
Mm-hmm.
We've got one question here from Delian. I live in the USA, but got a NIF as a retiree who has not come to Portugal yet with a pension. Is there any requirements? So my social security would not be taxed in Portugal when I relocate. In terms of the NIF, you should have a fiscal representative. So that's definitely a requirement you should have. In terms of your pension, as long as you're not considered a tax resident in Portugal, you don't need to declare anything, don't need to pay anything. It's only when you do become a tax resident that your pension income will be taxed at a flat rate of 10% if you have the NHR. And the Social Security, that should be taxed in the USA.
Mm-hmm.
We have one from Alison. Are you considered a tax resident upon arrival or at a date of CEF granting residency permit? Quick answer on that one is no, only when you become a tax resident. And we have Esther. Do I need to be considered a tax resident in Portugal for 5 consecutive years to be able to apply for Portuguese citizenship? What happens if I'm not a tax resident for the year? The short answer is yes, you do, because Portugal, for the citizenship, you need to be here for 5 years. Something that we can always confirm with our lawyers, but from our understanding is you do need that. If you're not a tax resident for the year, that may have an impact on your citizenship.
Mm-hmm.
We have a question from James. How is foreign sourced income classified? What are some examples of exemptions? Foreign sourced income, the easiest way to explain is literally any income you earn from outside of Portugal is going to be classed as foreign sourced income. That could be employment, could be dividends from a company in the USA, the UK. And once we know that's a foreign sourced income, we then look at what does the NHR state, what does the double taxation treaty state, and then that's how you can have certain types of exemptions. For example, dividends from a foreign company will be exempt from taxes in Portugal. We have one from Delian. How are you taxed on your Social Security? Is it monthly, the amount, or annually at 10%? Also, are veteran pensions taxed? There wouldn't be any tax on your Social Security if it's from from foreign income. Mm-hmm. Only if it was in Portugal.
Yeah. And it depends on the activity. If it's for a company, it will be monthly. If you have an activity by yourself, it will be every quarter. You'll have to report it every quarter, but you'll pay it monthly.
And then I think we have the last question here from Esther, so we can answer this. Could you explain a bit more about the tax needing to be declared by a landlord when leasing a place to the tax authorities? I moved house and rent a room, but didn't update my details. Is that a problem? I have problems with even post to my new address, which is why I didn't update. Okay, so what we mean by the tax needing to be declared by the landlord is you'll have a lease contract, and the landlord has to register that contract in the Portal de Finanças website. And once that's done, it means that the tax authority know that this is a registered contract, and they will obviously know the income that's been paid and the tax that's been paid on that contract. If that hasn't happened, it then makes it very difficult to be able to get the NHR. So it's important that the landlord does do that because that's what they are legally obliged to do. If you're having trouble receiving post to your new address, what we can say is, if you have the tax authority login, there's a way to update your address so that you would receive the address, you would receive the post at the new address. And it looks like we've just about come to the end of this meeting. I can see a couple of other questions which we more than happy to answer after this. So what I'd like to say is thank you for everybody joining. It's been a pleasure speaking to you all. Hopefully you have found it very useful, and we look forward to doing the next one. And in the meantime, we will make sure to answer any further questions, and there will be a copy of the recording of this emailing, as well as the answers to any questions that we've not managed to touch today. So once again, thank you very much from Gonzalo and myself, and we look forward to speaking to you soon.